Nigeria's headline inflation rate dropped by 2.1 percentage points to 8.02% in September 2025. Now, from 20.12% in August, marking a significant sixth consecutive month of decline since April 2025. Now, this is the first time in 3 years that the nation's inflation rate fell below 20%. The Bureau disclosed this in its Consumer Price Index report for September 2025. According to the Bureau, on a year-on-year basis, the headline inflation rate hits 14.68%, lower than the rate recorded in September 2024, which was 32.7%. Now, this shows that the headline inflation rate, year-on-year basis, decreased in September 2025 compared to the same month in the preceding month of 2025. Food inflation declined by 5%, that's 5 basis points, to 16.87% in September compared to 21.87% in August, as a result of a decline in the average prices of maize, grains, garri, beans, onions, eggs, tomatoes, amongst others. Now, on a month-on-month basis, the headline inflation rate stood at 0.72%, reflecting a moderation in the price increases across key sectors. The report shows that the headline inflation rate, year-on-year basis, decreased in September 2025 compared to the same month in the preceding year, though with a different base year of November 2009. Joining me live from the United States of America is also attending the IMF World Bank meetings, is a special advisor to the President on Economic Affairs, Office of the Vice President, Dr. Tope Fasua. Dr. Fasua, thank you so much for joining us. We understand the time schedule and, of course, your busy schedule over there in the United States, but you're still able to spare time for us. We don't take this for granted. Thank you for your time.
Thank you very much, Tolu, for the invite, and it's good to be here. And, good afternoon, Nigeria.
All right, then. I think we should start with back home before we now go to the United States where you are. I think it is good news that inflation has continued to taper down. It's the sixth consecutive time in this year, and now we are around about 18.02%. As some would say, we are heading towards the figure that the president projected before the end of 2025. What do you make of this? And what are the fundamentals surrounding this decline?
Okay, thank you very much. So if our luck holds and there's no major volatility, especially coming from the external sector, if our luck holds, I think we'll do better than the 15% projected for December 2025. You can see we're coming from 20.12. We were able to shave off about 2.1% indeed from a month to month between the month that's just been released. And that's a good one. If we go along that same trajectory, perhaps we'll be able to drop another, if you like, 4-5% before the end of the year, which will probably take us to about 13%, which is not too bad at all. And in fact, there's another report that was done by Renaissance Capital, RENCAP, where according to their own projection, they saw that already when Nigeria was quoting 20.12% for inflation, RENCAP, by their own analysis, said, look, our inflation is not more than 12%, and that we had overestimated inflation. And that was a report that was worthy of note to say, okay, fine. And they had their reasons. They were looking at the way the basket was composed and the weight that was given to each sector in that basket. So that said, I think it's a good one for us. And of course, you know that when inflation trends down, growth will pick up because the growth that is reported is net. The real growth after inflation may have been deducted. So we're looking forward to actually reaping bountifully from the reforms of government that were done in 2023, 2024. I keep on telling those who care to listen that the worst is over, and that we're going to be reaping those benefits. And you mentioned what are the fundamentals. Of course, food is our main driver of inflation. And as you can see, you also reported just now how the prices of food are falling. across the board, which is also a good thing. Even though we've heard complaints from farmers in Nigeria, especially northern Nigeria, where a lot of the staples come from, because the north is actually about 67% of the landmass of Nigeria. But what I tell them is that no farmer can produce all the food that he needs. If food prices drop across the board, yes, your own price may drop for what you produce, but remember, you don't produce everything you need. And so what you're also going to need as drops is dropping. And that's good for, and of course, when inflation drops, not only does growth pick up, investments also pick up, because whether people who are investing in portfolios or real sector investors, they care very much about inflation. And even at 18%, um, you know, they still view that our inflation is high when they compare with what goes on in their own side of the country. European inflation is 2%, right now. And interest rate is also around that same range. So it's a good one for Nigeria. I think it's something that's worthy of celebration. And also, very importantly, expectation management is key. I personally, from my own perch, from where I sit, I have no cause to be squeamish. I have no cause to be hesitant, about this. I have every cause to play this up. I have every cause to amplify this to let so that people will understand that contrary to what some opposition party people will say, and this is political economics. Nigeria is not dying. Nigeria is picking up. The reforms of President Tinubu is actually working. We have taken this kind of reforms that we hadn't been able to take in this country for a long time in this country. Perhaps since independence, we've not been able to take this kind of decisive reforms. And of course, when you take reforms, you bear some pains, and then things will pick up. And I'm saying to Nigerians, don't join the queue and the bandwagon of people who think that Nigeria is on the way down. You have to reposition. Like they say, you can't watch a masquerade by standing in one place. The economy has been reformed, sectors are changing, sectors are transmogrifying, and you have to reposition yourself to be part of that growth. Otherwise, you just remain where you are, believing in the negatives, and the world will pass you by. You don't want that to happen to you.
Interesting stuff there. I'm breaking down the figures. You've talked about food and all that this has happened. We've seen stability also in the FX market. We've always talked about this whenever I have you on this program. And you're in the United States, and a lot of conversations around Nigeria, Sub-Saharan Africa, and all of that. First, what do you make of the level of confidence in our economy at this time? What are investors saying with regards to Nigeria, considering these same reforms that we've been on for some time?
It's incredible because a couple of days ago, the Ministry of Finance, as well as the Central Bank of made a presentation to investors, and the numbers are looking very fantastic, and investors are very happy to receive the numbers from Nigeria. And their response has been very positive. We hope to see an uptick in investment. Like I said, inflation trending down is good to their ears. The fundamentals looking better. Revenues have already ticked up. The revenue, our tax revenue to GDP ratio is ticking up, and will tick up some more as time passes by, especially when the new reforms kick in January, go up even further. And so the response from investors has been very, very positive. And also, I think that the response side, very, very, the expectation from our side is also very positive. So we're looking forward to more investments rolling into Nigeria because the fundamentals are looking a lot better. Not only inflation going down, also revenues going up, tax revenues repositioning, oil sector performance increasing for the better every day. Before I came to this meeting, last week I was somewhere in Andoni in after Ogoni area in River State, where we launched the Otakipo crude oil terminal, which will add about 250,000 barrels per day to Nigeria's production and anchor a lot of stranded wells and abandoned wells around that area, and hopefully help Ogoni to come back into production. That we've been on that case for a long while. The technology has changed. There's fewer things like spillages and coal. And that's one great achievement by Mr. President through the Green Energy Investment Limited, led by Professor Adegbube. And even last week, we also understand that Shell has signed up for about $2 billion worth of investment in Nigeria, which is a new investment into this country. Look, I wrote an article last week in Premium Times and Cable, which I titled Nigeria Rising, meaning that we need to actually understand that and actually double down on the fact that we are on a positive trajectory in growth in this country. So 4.23% growth in GDP, that's not really our anchor. That's not our aim. Hopefully, before the end of this year, we should be able to report over 5% growth. And into next year, 6 to 7% growth as promised. And, in another year, maybe we should be looking at a double-digit growth as promised as well. I mean, I have absolutely no time for naysayers and people who choose to see the negative side. What I've always said is that with our kind of economy, we have so much space for growth and development, and I think it's finally happening.
Interesting stuff. Now, we see that the last drop we saw in inflation, of course, was part of what was considered at the last MPC meeting. And we saw a brief decline of about 50 basis points that puts us out at 27% for our MPR rate. Now, that's a monetary policy rate, where many will talk about lending and all of that. Now, many expect that this trend should continue by the next meeting in November 2025. Do you think that would happen, considering what we've seen in inflation? What more do you expect from the Apex Bank? And that handshake that we've talked about, what would you also say about it? You're close to government. What do you make of the handshake between the fiscal and the monetary side? So it's like a two-in-one question.
Yes, perhaps the handshake has never been better. There's been several meetings held by both, sides of the equation, monetary and fiscal. We have people who see eye to eye, who have intelligent discussions amongst themselves, who work together. Like I said, the presentation here was a joint presentation by both sectors, Deputy Governor, Economic Policy, and the Special Advisor to the President on Finance and Economics, who sits in the office of the CNE, were the ones that did that presentation. It's a fantastic presentation, and that's not the first time they were doing that. In regard to where rates are going, of course, CBN is a very cautious institution. Central banking is a very conservative, if you like, institution and discipline. So they've been watching where inflation is going. 6 months back-to-back drop in inflation rate. They decided to take a cautious 50%, 0.5% or 50 basis points cut the last time. Chances are that in the next meeting, they may decide to cut another 50%. That's my own projection. I mean, another 50 basis point, not 50%. That's 0.5%. Now, many people believe that, some people believe the central bank should come and make a 300 basis point cut or 200 basis point cut. No, the central banking doesn't work that way. And we have to be very careful because if you believe that, because inflation has trended down a couple of months, and then you want huge, it's something that we've always done in Nigeria, which I've always cautioned against. We like big things, no, central banking doesn't work like that. In time, if 50 basis points gets shaved off that rate, before we know it, we'll be looking at sub 20 in that sector, in the interest rates area. I think is it won't be a bad idea. Let's look at that going into next year. I doubt if we'll be able to go under 20 this year. And we don't want to take a risk that we'll remember that it's a double-edged sword. If you cut rates too quickly, you may see an exit of portfolio investors, which are also key in the management of the foreign exchange. So that's very important. Apart from the fact that yes, we want lending rates in the banking sector to go down so that manufacturers and co can and so on. That's another the other side of the equation. But we have to be cautious so that we also don't spur inflation that is going down to start to ramp up again. We don't want to hear that, and we don't want to see that going on. So it's a balancing act that the central bank and the MTC must play. But I think we are now going to see further cuts. Let's look at comparator countries like Ghana. We see that Ghana had seen 50% inflation as the last time I checked, their inflation was down to about 11%. Nigeria didn't go as high as that. We got up to 34.8%. We are also going to see single-digit inflation next year. By by all things being equal, by my own calculations and analysis, that's where it's going, and we're proud to say that that will be a reality. Single-digit inflation, and then of course by then we should be looking hopefully at interest rate trending down to maybe 15% or even lower than that. So it's a new kind of economy. We've done the necessary recalibration, and the only way now is up, except there's a global upheaval like another financial crisis, which we hope will not come anytime soon.
Finally, let me let you, because I know you have meetings to attend. We see the dollar moving down towards 1400. Something around that. It's about 1450 in some cases, 1470. It's been hovering around that. Manufacturers, I spoke to the DG of NECA, they've all commended. They say, yeah, they can plan and all of that. But I'm asking you, looking at your projection from where you sit, do you think that we could head to maybe 1400 before December? You know, December, the season too could also impact it. Do you think the currency is getting to that point where it's priced appropriately?
Yeah, it's been priced appropriately for a while since President Tinubu took the kind of reforms that he took regarding the naira, and that is to the extent that the central bank is not actively chasing a certain number. The interventions are fewer and more strategic. So by every means, it's been properly priced for a while. But also, whether it's 1400 or wherever, the bottom line is that this is in response to trading by parties on both sides of the equation, those who are buying and those who are selling. This is the expression of where the market should be, so we're comfortable with that. If the market believes that Naira should be stronger, then it gets stronger, but you see that it's very gradual. It's not a government coming to say, oh, we want 1,200 or whatever. It doesn't work like that. So I believe that it's a good work for the Naira. However, I'll tell people, let's forget the era of cheap Naira, cheap imports, and so on, and cheap travel. Let's forget that era. Let's forget the era of cheap petroleum that, people will buy gas and start driving around aimlessly and so on. We are now into a serious era where people must consider their actions before they take it. So this is where we are, especially on the Naira side. It's not, oh, let's ruminate about the old days when Naira was $1 to $1. What do we want to do with that? So that we can buy dollar and just travel around the world. That's not the bottom line. A serious economy knows that we have to go back to productivity and produce the things we need, enjoy our own country, move around our own country, and maximize our own resources, human capital and natural resources. So this is where we're getting to. It's a good one. Speculators have run away because they felt at some point that they can attack the Naira, and they did at some point when Naira went up to 1,009 to the dollar. And some people actually did buy money at that point. They bought dollars, hoping that Naira would crash some more. But those guys now, they're having their fingers burnt. Okay, so because speculators have gone, foreign reserves have climbed up to $43 billion with an aim in the interim to get to $50 billion. And that's why the fact that we are servicing our debts, servicing every other obligation, including imports. A lot of people are scared now who actually had no faith in this country. But, well, it's our own cup of tea. But for those of us on this other side, we're very happy and very proud of what Mr. President was able to do, Mr. Cardoso in CBN, Mr. Wale anchoring the fiscal side of things. They have shown great leadership for the achievements that we're seeing.
IMF World Bank meetings, that's where you are. So what are the comments for Nigeria? Let's wrap it up in 2 minutes.
All positive. Well, I don't have 2 minutes because I'm being called already.
Oh, for your meeting. All right.
Yes, all positive. I've told you the presentation that was done a couple of days back was well received. I've seen all over the news. The investors saying great things about the country and our economy. So it's all good. Thank you so much.
Thank you so much, Dr. Tope Fasua. Thank you for your time. I really appreciate the special advisor to the President on Economic Affairs, also the Vice President. Thanks for squeezing this out. A lot of meetings there for him at the IMF World Bank meeting, but was able to speak to us concerning Nigeria's economy and, of course, the inflation figures, IMF, Nigeria World Bank projections, and all of that. Well, thank you so much again, Dr. Fasua. Do have a great day. Well,